Welcome to another episode of Christian Financial Perspectives. My name is Shawn Peters, and I'm joined as always by my father-in-law, Bob Barber. And today our topic is helping people with investment choices for their work retirement plans. And for most people, their retirement is saved up in their work retirement plan. That's pretty common for a lot of people, especially earlier in their career. So we hope that this will be beneficial and helpful to you. Now I'm going to pass over to Bob, and he's going to give us a little more info on this.
All right, so I want us to pop this picture up.
Okay.
So you see this car, it's in a bunch of different pieces. And by the way, Shawn, if you gave me a car like that, I would have no idea how to put it together, all right? I mean, I see the seats there. I kind of know where that would go. But I just cannot imagine... And I see the engine block and some of those parts. How we would put this together. Of the parts. Yeah. But without any mechanical training, I would not know how to do this. And Shawn, I'm using this word picture because I see it truly as this is what is happening with people in their retirement plans. It's like Greek to them.
So effectively, Bob, what we're saying here is looking at the picture of the car and all the components and parts that go into it.
Yeah.
And we're saying for many people in their work retirement plan, that's the same situation that they're in. So if you are involved in a work retirement plan, there's a lot of options for that retirement plan. But just like the picture of the car, you're expected on your own to figure out how to put it together and do it right. And can be a little daunting.
So Shawn, the scriptures I picked today, ones I like, is Proverbs 15:22. You've heard me say that one many times, but I like it because it says, plans fail for lack of counsel, but with many advisors, they succeed.
Amen.
And Ecclesiastes 4:9 and 10.
Two are better than one because they have a good return for their labor. If either of them falls down, one can help the other up. But pity anyone who falls and has no one to help them up.
So Shawn, I've never met a person in my 33 years in the financial advisory business with a written investment strategy for investing in their work retirement plan. Not one.
Wow.
Nearly 100% of a person's retirement nest egg is often in their work retirement plans.
Yeah.
Which is supposed to generate an income once they retire for possibly 20 to 30 years. And Shawn, I call that insanity.
Yeah.
That's just crazy when I think about that.
Yeah. And it makes total sense because for most people, they can put far more away per year into their work retirement plan because usually, it's just a percentage from their paycheck and you've got the employer match compared with your own personal IRA. There's a limit on how much you can put in those, and it's a lot less.
Yeah, and there's a limit on these too, but
sure, but it's
we're talking $50,000 limits per year. So what are work retirement plans? With that, for many of you, if you are with a corporation, that's going to be a 401k.
It's by far the most common, I would say.
Well, it is, but there's a lot of government employees too. So the government employs it to be a TSP. Now, those are a little bit more simple because they'll just give you 8 or 9 choices there. Where on many of the 401ks, you have 50 or 60 different choices or more.
Yeah.
And that's where it gets mass confusion. Then we have 403B plans that are for hospitals, schools, nonprofit organizations. And then for like small businesses, a lot of them will use a SEP or a simple IRA plan. With all these plans, they're very similar as far as what you can put into them. I don't know why the government doesn't just come along and just say qualified retirement plan. Why they call them 401ks, 403bs, TSPs, SEP, and simple IRAs is beyond me. Basically, they're all the same thing. So if you have a work retirement plan, the rules pretty much are the same across the board.
Right.
Okay.
Right. Sure. Yes, there are maybe some slight differences, but I wouldn't get too worked up in it. But Bob, you said something really interesting. You said, why doesn't the government come in and just simplify it? Have we ever known the government to actually make improvements overall?
I don't think so.
Maybe a few rare circumstances.
Yeah.
But usually it's, how can we make this more complicated and less efficient?
Yep, exactly. So we have the typical retirement plan investment choices, and I've written this down so I don't miss anything.
Sure.
Because basically, just listen to this Greek to you. This is not Greek to us. We understand it, but You have specialized equity mutual funds consisting of large, mid, or small cap companies in growth, value, and blend style boxes, or a blend of several or all of these. Did that just make sense to you?
So that's the first one.
Okay. So these are all the different choices you have. Then you have your bond funds that are from long term to short term to intermediate term to high, mid, and low quality.
Number 2. Everyone following along, right?
Yeah,
Okay.
sure, exactly. Then we have our international and global funds.
Okay.
Then we have our sector funds like technology, healthcare, energy, consumer staples, etc.
Mm-hmm.
Then we have the assortment of ETFs, exchange traded funds.
Sure.
And then there's a combination of all of the above.
Yeah. You might have
Either
some
which
funds,
way you want to go.
Exactly. You might have some funds that are, some combination of some or all of those.
Shawn, this is just mass confusion. It's like looking at that car engine all apart, and nobody really knows what to do, and they're guessing. The average person,
Bob, it gets worse because then from one 401k, 403b to another, even if that retirement plan is with the same custodian or the same administrator like type company, it can still be completely different choices from one company to the next.
That's
or
right.
from one organization to the next. And then each of those custodians, when you're trying to compare, they might have large cap for the S&P 500 or the Dow or whatever. Okay, but they'll have that and they have a name for it, but another custodian has a different name for it. So even then, it's like, unless you know what you're doing, you can't say, oh, I'll talk to my friend because he's doing pretty good. And what did you go into? Well, it's not the same names. So it's a little confusing.
I was talking to Teresa this morning about this too, and she said, yeah, I mean, somebody says, oh, that's a growth fund. Okay, well, I'll go into that growth fund. Growth sounds good. Well, okay. Do you understand the risk and reward of that? Do you know if it's small cap growth? Is it large cap growth? How's it going to feel with the different markets? I mean, there's just total confusion about what to choose for the average person, and it's overwhelming. They really don't understand all of these choices, the risk and reward behind it, how they're going to react to all the different market scenarios, bull markets, bear markets, up down markets. So
like what kind of risk is actually in simple number terms? What kind of risk is actually associated on the positive and negative side with these different options?
So what do you think they end up doing?
Throw a dart at the wall or guess.
Yeah, exactly. Yeah. That's exactly what they do. They end up guessing because really there's no one there to help them. Shawn, there's just no guidance.
Yeah.
I think there's supposed to be guidance, but okay, if somebody gives you here's this prospectus.
Yeah.
They don't know how to read that. Most people don't know how to read that. They don't know what to look for. And
well, most of the way the administration is done on these 401ks, 403bs, etc., it's effectively, hey, I just want to make sure you're signed up. Okay, I'll help you make sure you can log in. I'll make sure that you know how much you're actually contributing.
Yeah.
And here's the ones that are available. But when it comes to actually ascertaining, what level of risk are you comfortable with? What is your, long-term goal? And what should you actually invest in? Good luck getting any help from HR or the plan administrator, because I mean, there might be a few exceptions, but overall the industry standard is, good luck. You're on your own.
Folks, I know this because I talk with you every day of the week, okay? All year long for many years. And you feel lonely when it comes to this. You really don't know. Maybe you're going to ask a few friends. That's like asking for a stock tip from somebody on the golf course.
Yeah.
Okay. There's just nowhere. Who's guiding you? There's a total misunderstanding of all the asset classes, the risk and reward.
Yep.
You don't even know how to build an investment model with this. You might as well be looking at a 20-page menu in a restaurant that's written in Greek and you don't understand.
Assuming you don't speak Greek.
Yeah, exactly. Yeah. So since I've really never met a person with an investment strategy for their work retirement plan, they have no blueprint, there's no target, there's no financial analysis or how to do it, no understanding or risk or reward. Shawn, I think.
Okay, Bob, I think everyone might be thoroughly either depressed or frustrated or feeling very very triggered, maybe, but I feel that way.
Okay, I'm done with you, Bob. I'm going to another. Okay.
So what do we do? What are the best choices for the majority of people?
So I think that the best choices for the majority of people is to look inside your plan and look for a target date or a life cycle fund if you understand the risk and reward of it.
Yeah.
Okay. And they're going to automatically adjust the mix of investments for you as you get closer to retirement. And it's like putting your investments on autopilot. So you
Yeah.
have professionals putting together this complete asset allocation model.
Right.
The one thing that you got to understand is the risk and reward of that.
Mm-hmm.
The second word being reward. Because the farther you go out, the higher the risk.
Right.
The closer the date, the lower the risk. So let's say somebody picks a target fund that's a 2025.
Right.
We are in 2023. That's going to be a very conservative portfolio.
Exactly, because we're talking less than 2 years from theoretical retirement. I think that would be a good way to look at it too. I noticed just in the last couple of weeks, we had a few clients that I was meeting with, and I did take a look at their 401k because I just want to make sure they were contributing enough, things like that. And between those, of the four, 3 of them had completely different names for the target date funds. Okay. 2 of them were from the same custodian, which was, I couldn't figure that one out. But the easiest way to identify it is they'll typically have some sort of name. They might say target date, they might say life cycle, something of that nature, but they'll have a number. And it's usually either every 10 years or every 5 years. So like Bob mentioned a little earlier, if you see one that says 2025, 2030, 2035, just think of that as, okay, if I retired in that year, that's correct. That's the one that you want to go with. And I would say probably would make sense that, if you're kind of in between the options and you're retiring in 2030, but they only have a 2025 and a 2035, you should probably go with the 2025, Bob?
Until you really understand the risk and reward, right. Correct. And then, Shawn, you also have to play this into, like you say, how far are you from retirement? Mm-hmm. How does it mix with your other investments? So you have to look at this as a holistic approach, which you can. For many people, maybe this is it. This is all they have for retirement. So that's easy, but
which is pretty common.
But for others, maybe 1 out of 3 that I'll meet with, they have a lot of other investments. So all that has to really play into, where are those investments and how are they invested? Are they aggressive? Are they growth? Are they blend? Are they conservative? And how this is going to play into it. So really all this you need the help of somebody that understands how to do it. And that's where we're coming to you today. We talked about this yesterday when we were putting this together. There's, like you say, there's a lot to consider, and we're going to offer from this program today a $200 consultation in which we will give you a risk assessment through our Riskalyze program, which is very thorough. We'll explain that to you. Right. And then we'll look at your 401k or your 403b or your TIA, your
work retirement plan, whichever one
your work retirement plan. And we'll look at how this is going to integrate and help you to understand what you're investing in. And I think this is a very fair price to do this for. I mean,
it's a small price to pay for peace of mind.
I mean, I think $200 is very reasonable for that, especially if you have even over $40,000 or $50,000 in your retirement plan. It is worthwhile to do. Okay,
and that risk assessment, just so you know, it's not subjective. Of like, well, what are you comfortable with? It's very mathematical, where we help you look at some questions and figure out what you are or aren't comfortable with. I think the easiest way to look at it is you want to be as aggressive as possible to meet your goals, but not too aggressive where you're going to make the decision of, I need to go more conservative when the markets are down. And
volatility.
And there's going to be volatility no matter what you're in, but using an objective approach, we can help you see and visualize, okay, in a given 6-month window, what kind of positive, negative might you be seen in something like this.
And can you take it?
Yeah, and are you comfortable with that? Right. And then we can determine, okay, well, what might be the best option for you within that plan.
So we hope you found this useful today. I know it's kind of an interesting topic. It's kind of hard to talk about, but we're here to help you, and you can get a hold of us to do this risk assessment and look at your 401k by giving us a call at 830-609-6986. You can text that as well, 830-609-6986, or you can go to our website at christianfinancialadvisors.com and you can book an appointment right from our website with either Shawn or I.
I think that's all. Thank you and God bless. Thank you so much for watching. If you enjoyed that video, be sure to like and comment and subscribe to our channel so you can get future updates. You can also follow us on social media, handle shown on screen. In the meantime, check out one of these other videos.